So if you want to buy those stocks in the international markets, you can always come to us. AIB, yes, we are offering international markets, but through our trading desk until we integrate with a digital platform. So I think I'm back again. Confirm you can see that screen. As I also check how many more slides. We don't have many slides, so don't drop. I think we have around 2, 3. Then we come to Q&A. Confirm you can see that screen. Okay. So now market depth is that screen you can see. Can I cross? Let me cross this. Cross that. Yes. I'm just removing some screens so that you can only see 3 screens. There is a screen I'm moving. Come it will move. That one I'm moving. It's what is called market depth. The one that is replacing the graph. It is split into 2. It has the bluish side bits. Let's see if I can zoom in. Okay. Yes, it can zoom. Just confirm you can see the zoomed screen, the one that I've zoomed. So that is what is called market depth. The one that I've split, bid quantity, bid price. Offer price, offer quantity, splits. This is for Absa, as you can see on top. So we have said the bids on the left side are buy orders which have not executed, queued at different prices, waiting for the market to come down. We have 2 orders, the split 2, 57.69 at price of 22.15. What that means, 57.69 is a makeup of 2 orders. You can see that at price of 22.15. Then there are other people who want to buy at 22.10. 190 shares, 9 orders. So 9 is 9 orders. Then below that we have 22 orders at 72,739, the total quantity at 22, now going down. On the upper side, the same thing, 2240, 15,379, 3 orders. So split is the number of orders. You need this. It's only available on online portal. On the app, you only have bid quantity, bid price, offer quantity, and offer price. Now, in terms of pressure, you check where, like now, in this screen on the bid side, you look at the highest next quantity on the bid. Like now, if we start from the top, on the bid quantity, we have 1 at the top, then we have 57.69. That is not that strong. We come to a 90, again, it's not strong, but there is 72,739. That's where bid pressure is concentrated, because that's where much of the orders are in huge quantity. Even if it is 1 order, it could be 1 million. It means that somebody who is willing to sell all those shares until they are clear. People below that will not get. So that's why there's selling pressure. At the top bid, that is the highest bid, is just 1 share at 22.20. So the strongest bid in this case is where pressure is at price of 22.778 shares. Now on the supply side, again, the lowest offer is at 22.40, 15,379. So if you check on the quantity, offer quantity, you realize selling pressure or the highest offer quantity is at the top. What does that tell you? For Absa, supply is trying to suppress demand. If you're quick enough, you can buy at 22.40, because if you put a buying order, if I was to click buy, I hope that screen can come. Let me zoom in out. If I was to put my price at 22.40, I would get the share immediately. But am I buying at lower price? Just check. We have said bid pressure, the buying pressure is 22 shillings for 72,778. If I was to put at 22.40, I'm actually overpaying. Why? There is a likelihood of this price coming down. Check bid quantity at the top, 2240. You only have one order. It only requires one market order to come and clear. 5,769. Price is 22.15. It only requires 2 or 3 orders to come and clear. 190 shares at 22.10. It only requires 1 or 2 or even a single order to come and clear. But 72,000. So in this case, if I was to buy, I would target a lower price. I'm coming to that in the presentation, but I want to go through this so that when I'm going through the presentation, you understand. So at least now from market depth, you can identify where buying pressure is, where the huge quantities are. On the selling side, the same thing, where huge quantities are. The next thing you check is the bid splits. How many number of orders are there? If there are more number of orders, remember all those orders have to be cleared for the lower prices to execute. We'll come to that. Let's go to another stock. Maybe this time I can pick Safaricom. We see where the pressure is. Again, look at the bid side. The top quantity is 6,000 at 27. At 24, 62,900. At around, that is 27.70, 62,000, around 63,000. At 27.65, you have 248. This means for Safaricom share, the buying pressure is at the top, not at the bottom. Notice the other prices below 27.60, there are few shares. But at the top, near the top, that's where buying pressure is. If you look at the offer side, at the top, the lowest is 27.80, 220 shares, 27.85, 6,000. At 27.95, that's where, again, selling pressure is. Then 1 million below it. So it means, again, on the selling side, the pressure is nearly at the bottom, because you realize 1 million where it is, it's sold by 3. So if you are to buy Safaricom, you'd better put your order at 2. To sell at a good price. Instead of selling at 27.80 or 27.75, you better place your order at 27.85, because the orders above that, we are few. If you are to put at the price of 27.95, remember these 384,000 have to be cleared first, which may take a while. I will come to that when we go to the next slide. If you are buying, however, these are stock, either you would want to take it to 27.80 because the buying pressure is at the top. If you put your price at 27.70, there's already 63,000 shares ahead of you. You have to wait for those to be bought. Would you want to place your order there? You'd better place it 27.75. You wait for the 6,100, and it requires a few orders. These are just 3 orders, split 3 orders. It only takes 2 or 3 orders to come in clear. Remember, I said I will show you how institutional orders are done. Let's take another third stock before we come to institutional orders, so that you decide why these 6,000 should not worry you. If you are buying, if you are selling 99, 7,685, that should not worry you. Because institutional orders, you never see the 1 million. Like now, the 1 million you can see on Safaricom. I can tell you it's a makeup of many orders. You can see it is 18 orders. Those are not institutional orders. Or if there is, I'll explain how they do it. And I hope there is nobody working with a custodian or a fund manager. I hope I'm not exposing you. I hope now you're understanding why some of these videos cannot go somewhere. Let's look at Williamson. This is Williamson. Notice, again, weak bid. Buying pressure, it's at the bottom and it's very small quantity, but notice the price. When you're saying it's small quantity, check the price. You only need to multiply and see the total value of those shares to see, is it possible for these orders to execute? Also on the selling side, notice these are stock that is balanced. That's why I said these expensive stocks are usually owned by the retirees who are not willing to sell. So there is a balance. These are shares that is balanced in terms of selling and buying power. Let's go to BAT. No, I said BAT is a stock that is also balanced. Notice selling pressure. There is nothing. It's at the top in small quantity. The same thing on the sell side. This is a balanced stock. You don't expect, notice even in graph, there is not much fluctuation. Huh? If you look at a graph, notice the graph itself can tell you it is fluctuating, but early in the morning. Huh? So before you come to institutional trades, let's see the chaos window. Look at that graph in the morning. This price was around 9, fluctuated way up, then started low, then fluctuated up, then after that, stock stabilizes. Let's go to another stock. Let's take our Uchumi. Though I don't like using Uchumi, it frustrates. Notice, selling pressure at the top, no buy side. Why? The sell side have already dropped. It has dropped down, and I don't know what these people are trying to do, the 2.5 million. Notice the price have not moved. It is stagnates. These are stocks you don't want to get into. So I hope now you have noticed. I just want to pick a stock like Safaricom during the chaos window. If you are buying during the morning hours, you would have been hit by 28, yet the share have already gone to lower prices. We'll come to this chaos window next time. Let me show you how institutional trades do. In your screen, you have quantity. For them, they have disclosed quantity. So in their quantity, they can put 10 million here, even 50 million, or let's say they can put even 70 million. But in the disclosed quantity, they always have another field, disclosed quantity. What do you want to show the market? Yes, the order is 70 million, but what do you want to show the market? They can put 1,000. So you on this screen, for market depth, you see a 1,000 or 4,000. But behind that order, there is a very huge quantity. That's why I said you always need to know who is buying that. Is it foreigners, or so that you know, is this price likely to go down? You see, like Safaricom is a bit quiet. The reason is there are so many other orders behind which you can't see, which are still executing slowly and by slowly. And some of these are institutionals and foreigners. Most of them, they wait for the market. That's why some stocks you see the prices fluctuating quickly, because they have not placed the orders. They place and they see, they can decide, let me first take like these 384. They place their buy order, immediately pick the shares. So if you see a stock that is fluctuating in price, that's a stock you can wait for lower prices. If you see it is stable, it's not moving a lot, then you use GTD, good till date. Let's go back to the presentation. We quickly go through how to identify cheap prices. Then we come and try to play with it. Play with the system. We see how now to do the orders, because that is the most important. We have moved from DCA, what it is, how you use market depth to identify selling and buying pressure and identify lower prices. Let's see now how you can get those actual prices. And what we do here is now the opposite. If you are selling, if you have to sell at high prices, then how do you identify it? So how to use bid, offer, and quantities to choose your price. That is the most important. Confirm you can see that screen. Pascaline, just confirm. Is it on market depth? Pascaline, you can confirm what you want me to repeat. Maybe I can repeat before I move. Well, you can post, then I will come back to it. Because I'm also going back to the market depth. It's the one we are selecting. Cheap prices using strong demand and strong supply. So I'll come to that. And for those who have been buying, this is the right time now to make decisions. Whether you want to be buying shares quickly, remember you pay more, or you want to put lower prices, the same way our dealers do. For those who are managed by agents and by wealth managers, in-house wealth managers, they know once you tell them buy me shares, they can look for these signals and buy at lower prices. Now, these I'm bringing now to you. You can make those decisions. You try now to play the same games they play and take advantage of the market. So when placing the orders, you place on strong bid levels where there is strong buying pressure. You check the quantity. If it is still small quantity, you can put within that price, or you put at a higher price than that. I'm coming to that. Let me first go through this quickly. So you look at large bid quantities, which show you demand. So if you see the price where there is a lot of shares on bid side, you want to place your order just slightly above it and you give it GTD. Because supply, there is a likelihood it will come and clear the top prices, then you'll be the next before they come, the big orders. Remember, as I said, there are market orders which still come in. There is you and me who can see the prices. We want to sell immediately, so we are hitting at the current bid, lowering the prices. So this helps you avoiding chasing small offers in the low quantity. You put your prices, your orders at lower prices. So then how do you avoid buying at the top? When you go to the platform, don't just quickly go to market depth and decide I want to buy, unless you want to buy immediately.